Good afternoon, everyone. This is Brian Weber from technicalanalysis.research.com. This is just a little update for the morning analysis video that was posted this morning. Before I go further, I just want to apologize that the video was posted a little bit late on the SFT website because those guys had a little bit of a problem. Their website was down for a couple of hours this morning. Not their fault, it's just one of those things that happens. But the video was posted on YouTube around 8 a.m. just before, right about the London Open. The video was posted on YouTube, and then it was posted a little bit later on when the SFT site came back online. So again, apologies about that, but it's just one of those things that happens from time to time. So based on the morning report, what we had was a significant area on the chart around the 130.70 up towards the 130.90 level, which is around this zone here. What we were saying was there was opportunities to go long and short based on this significant area. To go short in the market, what we would have had to have seen was price busting out below that 130.70 level and then coming back within that zone and giving the sell signal to go short down towards that 130.50, 130.30, and all the way down to possibly the 129.93 level. But we would have had to have seen that bust out. So the breakout of the 130.70 followed by a pullback back within that zone of hold it, retested as resistance, and then look to short the market. The other scenario that I pointed out towards the end of the analysis video was the possibility of buy signals. And again, to go along, we would have had to have seen the test of our significant area again on the chart, which was the 130.70 up towards the 130.90. So really any move at those levels followed by a buy signal would get us long in the market, and we would target the 131.47 up towards the 131.75, 131.85 levels. As you guys can see here, if you look at the morning video, I made the morning video when we were trading about here roughly in the market, but since then we have had to move down towards our significant area, which is the 130.90 level. And as price puts in its lower lows at these 2 points and tests our buy and sell zone, we've got the stochastic moving up, creating divergence here. Okay, but not only that, if I just draw this level back in again, what we can actually see as well is a little candle formation, which is called tweezers or rail tracks. There's a few other names for this particular candle formation, but that's when we get a candle moving down, and then the next candle is exactly the same size as the previous candle, but going in the opposite direction. Okay, so we got the red candle, then we got this blue candle right here, which is equal size. Again, this is rail tracks or tweezers. There's various different names for it, but it's a reversal candle formation. So not only do we have a candle formation, a reversal candle formation at our significant area down here at 139 down to 130.70, we've also got the bullish divergence on the stochastic. So stochastic is putting the higher lows and price is putting in the lower lows. And based on this candle formation, we can then go long in the market around the 130-100 level and trade this up towards the 2 targets that I pointed out on my analysis video this morning, which was the 131.47 and then the higher resistance zone up at the 131.75, 131.85. And price is pretty much hit both of those levels. We've hit the 131.47 small retrace, then move up towards that 31.75 level. Okay, so depending on your risk appetite, you're either got out of this trade with about 47 pips, 50 pips profit, or stayed in for the second target, which is about 75 pips or so, 70 to 75 pips on the trade. Okay, so that's the update based on this morning's analysis. Again, if you followed my significant area I pointed out, your sell signal would have been if price breached the 130.70, pulled back, and then give the signal, or the buy signal was to come within the zone and give the buy signal. Okay, and that was the buy signal that we actually had based on divergence and the candle formation reversal. So what do we have this afternoon? Well, this afternoon we've actually got the ECB President Draghi speaking at 1:30 p.m. And that's going to create a lot of volatility in the market, especially if he starts hitting out comments that the market doesn't like or the market really likes. And to be perfectly honest, I would advise everyone just to stand aside for the rest of the day. If you've taken this trade this morning, major pips, just stand aside, because really when the ECB president talks or gives a speech, the euro can go absolutely crazy, and you can actually see moves in the region of 30, 40, 50, 60, 70 pips within seconds to a few minutes, went like 50-minute candles, moving 40, 50 pips in either direction, as well as large spikes. And it's just far too dangerous, because at the end of the day, the technicals don't really stand a chance, because it's just all about his comments. You could be short in the market and he makes a good positive comment about the euro, and it'll spike up, literally spike up 50, 60 pips, which will just go right by your stop loss. So to be perfectly honest, just stand aside, just let Draghi say what he's got to say, and just let the euro do what it's got to do. And tomorrow's a different day. Tomorrow's a brand new day. We can trade the technicals again. But if you're the type of trader that just has to trade the market, uh, and you want action, then we do have a new support and resistance area around the 131.20 level, right about that region right there. And really, if we're going to see another up leg on the euro dollar, it really has to contain within that zone there, just above that 130.20 level. Really, what you're looking for is like a rejection, to take it back up above that 131.47 level again, if we're going to see another leg up in the market. Okay, but if that 131.20 level gives way and we actually see price trading below that level, then chances are we're just going to move back in towards our significant area, based on the morning analysis, and also which is the day's lows. Um, and again, the volatility in the market based on his comments that he it gives out, it's just going to make far too volatile markets, and really unpredictable markets that just blows the technicals out the water. So again, my personal opinion would be to stand aside in the market for the rest of the session, because it is just too tricky. But again, for you guys who just like action, then that 130-120 zone is going to be key. Again, if you do break below that level, then look forward to pushing back down in a significant area. But also look for buy signals at this area if it can remain above it, and trade this back out towards the 130, 147, and possibly even higher. But again, comments out of ECB can produce large and oversized candles within a few seconds to a few minutes. So very volatile time to be trading when the ECB are making comments. And again, personal opinion, just stand aside.